Hello, everyone. Thanks for joining us today. Today, we're joined by Samson. Samson is out in Colorado, has a unique background that I'm excited for him to share and dive into today. Samson, you want to give a brief introduction about yourself?
Yeah, I'd love to. I got my start in 2008 trading highly leveraged futures and commodities and made a complete logical jump from getting a degree in human physiology, where I thought I was going to be an orthopedic surgeon, to graduating on a Friday and walking into a futures and commodities brokerage on the following Monday. About 3 months later, I was a newly crowned Series 3 futures and commodities broker. The world was my oyster. I was going to make a ton of money and just kill it. And September 29th, 2008, the Dow Jones fell 777 points in a single day to set off the economic housing crisis. So I literally got baptized in the deep end of the pool. But it was a beautiful place to be because I had nothing to lose. I literally had negative dollars to my name from a couple student loans. And I learned about economics very, very quickly. It's where I learned my sales skill, my economic skills, my investing skills. Spent 4 years doing that, and I got pretty burnt out after I was sleeping with a laptop next to my bed. We were doing some, managed trading systems and programs. And when you're waking up at 1 or 2 o'clock in the morning to watch markets like the coffee market open, you start to get a little burnt out no matter how good the money is. It was pretty much working from Sunday nights until Fridays at 4 o'clock. And I was going to leave. I was going to go be a financial planner when I was presented with an opportunity to grow a fast growing marketing and technology company where we focus specifically on small to medium sized business. And that was a heck of a ride for just shy of 10 years. We scaled that thing from about 30 employees to just shy of 600 and a little over 100 million in revenue. And then along the way, built a really awesome strength and conditioning facility, built a real estate portfolio, have invested in all sorts of things. And then now what I do is I focus specifically on, I have a multifamily acquisition and asset management company, as well as I do commercial real estate advisory and business advisory for all sorts of different kinds of businesses, but mainly those that are specifically in the real estate vein. Right now, the coolest one I'm working on is a project called Fourth ID, where we're doing remote access control for multifamily housing of all things. So think smart device unification across, A and B grade multifamily properties.
Fascinating. A lot of things to jump in there. The first one, how do you go from being a futures commodity trader to fast growing small marketing and tech company? How does that opportunity just come along?
So the CEO of the futures and commodities brokerage was an entrepreneur. And when 2008 hit, he had already gone through the savings and loan crisis, the dot-com bubble, the 9/11, as well as now 2008. So he was pretty much fed up with it and was like, I'm ready to do something else. He knew that the best opportunity and time to start a business is during an economic downturn. And so the futures and commodities brokerage was funding the marketing and technology company until that reached, its own critical mass. So I've always loved the world of finance and investing, but the opportunity to come run business development, when you're 24, 25 years old, is a great opportunity to really grow up and be entrepreneurial within a larger organization. So I was able to build, 4 departments and hired north of 400 people and, go through a couple of rounds of funding and hiring and firing and poking my head inside of thousands of businesses across the spectrum, from chiropractors to doctors to landscapers to roofers to e-commerce businesses, and learning, their biggest mistakes. I am very blessed that I had that opportunity. Not everybody gets that, but I also have been very good my entire life about identifying opportunity and jumping on it. And I think that that's probably one of my best qualities is futurism, like my ability to see around the corner and connect dots where they don't currently exist.
So it sounds like that CEO became somewhat of a mentor, kind of helped at least present up. There were opportunities that were there that you obviously had to identify, pursue, and walk through. But it sounds like there was a little bit of a path that was granted for you almost to kind of pursue into different areas.
Yeah, I mean, it ultimately comes down to loyalty and trust, right? So as this as an employer, it's you really want to be able to hire people and trust them and allow them to go execute, because otherwise you just end up creating a glorified job for yourself if you feel like you need to do everything. And so, I was able to do that and proved myself over and over and over again. And then, everything kind of runs its course, and I developed all these skills, and, there's only way one more place up from where I was at, which was to go run that company itself. And so it's time for me to go do my own thing. And I don't know if I would have had it any other way. I wouldn't have called myself like a purebred entrepreneur where, I was the kid like in sixth grade buying candy bars and slinging them to my friends. That was not me. I was focused. I was a skater kid and I played sports. And when I was 14, I found football, and that took me all the way through my college career. So I'd always been real focused when I decided I wanted to do something. I didn't realize how creative business and entrepreneurship could be. And I tend to be pretty creative type of person that way, and guitars and tattoos and things like that, and so I fell in love with entrepreneurship when I just realized the freedom that comes along with it. The ability to just see something and create it out of thin air is pretty rad.
So as you were on this journey, right, earnings started to increase, right? Didn't have to worry about cost of living anymore. You had free income. Where did you start to put your money, right? It sounds like obviously you were employee for a little while, but you had these unique investment opportunities that were coming up due to the nature of the entrepreneurial kind of environment you were in, right? And so how did you figure out, and what was your thought process or framework for deciding, where to put your money?
Yeah, step one, I started with probably the basic stuff, just trying to avoid taxes and setting up traditional IRAs. Gosh, I wish every time I break down taxes for somebody, they're like, why don't they teach this in school? I don't know, but I didn't really have any guidance on that front. So I had to figure that out. Real estate made sense to me. My dad was a contractor, incredible home builder and craftsman. The concept of like having and owning something tangible made a ton of sense. And a lot of my customers on the futures and commodities business, they were producers. They had corn farms and pig farms and cattle ranchers and crude oil and gold and silver and stuff like that. So they tend to always make the most money because they were, owned real stuff, and they were using the market to hedge. They just weren't speculating. So that was the first concept of like, oh, owning assets is more valuable than just purely speculating on futures prices, which is what most people did. Because, you can make a quick buck. I mean, I watch people take their accounts from 25,000 to $1 million trading futures, right? But there's a saying that's everybody's a genius in a bull market. And so, which is a lot of like where we're at right now. But so real estate was probably the first thing that I started focusing on. How do I buy my own home? How do I leverage that to buy more real estate and investment and diversify? I also watched my parents go through 2008, where they had bought a house in California, and it was probably like 200,000, watched the thing go up to like 800, and then, got mortgaged up to the gills like a lot of people did, and then watched that whole thing collapse. And I always told my wife, I said, if we ever build up enough equity in our properties, I'm going to start going horizontal. I'm not just sitting here banking on this to last forever. I need to pull out that lazy equity and go deploy it. So my brain was already kind of thinking and wired that way. And then along the way, I dabbled in some consulting and have a degree in physiology. So I figured I might use it, and launched a gym, which has been very successful. And then I learned about self-directed 401ks. So then I started, setting up my own EQRP and maximizing my deductions as well as my, tax benefits accounts. And now actually, I've actually been spending a lot of time paying attention to the cryptocurrency market, more specifically the Bitcoin market, which I think there's a big difference between those two. But I've effectively, as they like to say in the Bitcoin world, taken the orange pill. I get it and I understand it. Wish I would have understood it more, because in 2009 or 10, I had a bunch of software engineers tell me that Bitcoin was going to be this massive thing, and I did the typical traditional finance push to saying like, there's no way, this is never going to happen. And then I read a book called The Bitcoin Standard, and that pretty much changed my outlook and perspective. But I tend to be pretty calculated and, risk averse. So, I always want to know what the downside is. I think the other way I started investing was just starting businesses, understanding the tax advantages that come along with living in a capitalistic society. The government relies on us to do two things, which is to create jobs and to create housing. And so if you want to maximize the tax code, those are probably the top two ways to do it.
So you had mentioned, let's go into Bitcoin for a second there. As you look back, obviously hindsight is 2020. Reading the book obviously helped. Is there anything that you would have done in your strategic framework in evaluating that back then that you think would have changed your mind to actually invest and pull the trigger?
Yeah, I didn't understand back then, even though I was in the world of futures and commodities, like really how money worked and its utility, as well as just stores of value and how they come about. And I also didn't understand that we have a fiat currency backed by nothing effectively, right? And so those are things that I've come to learn. And now when I hear stats like the fact that we've printed 8 times the amount of money in the last 10 years, productivity's only gone up 1%. I start to question how sustainable this is. And if I would have known more about inflation and how sitting in cash, I grew up blue collar, right? So it's all about save, 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 save. And I had to change my mindset to deploy, 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 so that you can beat the inflation curve. So yeah, I don't know. It's just school of hard knocks. I wish somebody would have said to me, this is your answer you're looking for. I wish they would have said, hey, Samson, if you could have gone back to the 90s and somebody told you that you could have owned a piece of the internet, not the companies that were built on the internet, not internet companies, not Google, but owned a piece of the internet. And the more that network grew, the more that piece of the internet that you own would grow in value. Would you do it? Yes. Well, the evolution of blockchain technology to computer science is equal to the theory of relativity to physics. Like, it's that profound. And so Web 3.0 is, a decentralized, open sourced internet with data privacy as the top priority. So do I think Bitcoin has legs, and do I want to own a piece of the new internet? Heck yeah. I mean, Michael Saylor said it'd be like owning Manhattan dirt before they started building properties on top of it,
Something tells me you've got a decent chunk of that in your portfolio somewhere.
Right now I do. I mean, I don't want to be sitting in cash, you know what I mean?
Yeah, for sure.
It's hard to find good deals. We were talking about that. Real estate's, I mean, it's competitive.
So you started essentially traditional savings vehicles, 401ks. What was kind of the first investment that was outside of 401k or stocks or bonds for you?
It was probably our very first real estate deal. We bought a home, and it really started increasing in value. I mean, our equity was like crazy. We had stocked up a bunch of cash, and I got done reading this book on, real estate investing, like all the creative ways to find money. And back then I had this perspective that I had to have all the money. I had to be the person getting the loan. I didn't know about joint venture partnerships, and I didn't know about private money, private debt, private equity. I didn't know any of that stuff. I knew it existed, but I thought it was unattainable to me. So we took out a HELOC on our primary residence, and we took that money plus cash, and we bought a single family home that had an unfinished basement with a separate entrance, and it was zoned for multifamily. So we converted a single family to a duplex. And honestly, it was a slam dunk, mainly because I spent, a lot of time preparing before I pulled that trigger. I think it was Samuel Adams or somebody like that who said, if you have 6 hours to cut down a tree, spend 4 sharpening the axe, right? And so I just spent a lot of time really understanding and investigating and talking to people who were smarter than me. So I bought this house for like $220. We put $40,000 into finishing out the basement unit, and it cash flows like $1,000 a month. If I put it on Airbnb, it cash flows like $3,000 a month. So it's a killer property. I don't know if I'll ever let it go just because it's kind of special. And not to say that it didn't come with trials. I remember I let my brother moved out from California and he lived there and he was supposed to disconnect the hose and he didn't. And the pipe, it froze back through and burst and flooded like 1,200 gallons into the basement unit. But hey, that's what insurance is for, And he learned a valuable lesson about why you get renter's insurance because I let him move in with me and still made him pay me rent.
Nice. Teach him about hose bibs.
Yes, exactly.
Uh, so as you fast forward, you talked a little bit about kind of going horizontal. Kind of what's your thought process today and your framework in terms of how you look at your investments for your free cash flow? Sounds like you've got a couple different businesses, likely throwing cash, right? How do you think about where you put that cash? Because obviously inflation, we know it's rising, cash sits, it's going to lose value. Where do you go?
Yeah, so I tend to live on my consulting retainers, as try to live below our means and invest the difference. So any excess is getting deployed into other things like Bitcoin or real estate or business. I love real estate. More specifically, I love large commercial multifamily apartment complexes, mainly because they're very hard. Like the barrier of entry is very hard to get into, and it's a lot more like buying a business. And you're playing just on a totally different ball game, right? We're talking, 10, 20, $30 million raises and joint venture partners and large amounts of debt. Your biggest investor in any one of those deals is your debt partner. So I love that. And I have a couple partners there and we have a team and I invest back into those businesses to keep people employed so that I can have more time freedom, right? Like to live 10,000 foot view up above and really focus on getting good deals to the table and managing joint venture relationships. And then I invest back into the gym that I own. So business operation is another way that I'm investing my time and my money is because it's really hard to do. Real estate is sometimes really easy. It's like a simple business that people can get into. But running a business, running something that's ethereal and blue ocean and has employees, sticky and gross, most people aren't very good at that. So I've gotten very good at my business operating system and I've deployed it in my multifamily business. I deployed it in my consulting business. I deployed it in my gym business. And it affords me to really be an operator and now let my business run me and have people that I can delegate to elevate and get more time freedom. Ultimately, I think that's what we're chasing, right?
You never get time back, right?
No, sir. Life is now.
Life is now. You don't know how much time you get either, right?
Sure that.
Yeah. I forget, I think it was Dalai Lama who said, you trade health for money now, and later you trade wealth for health, right? And it's just like, what are we doing, right?
Exactly right.
Trying to pull forward and reevaluate. So that definitely resonates. What's the kind of most interesting bespoke kind of investment opportunity, either you've invested in or seen recently that's top of mind for you?
It's this new development project that I'm working on. It's actually a redevelopment, taking an old lumber yard and redeveloping it into personal warehouse space or flex space. It's an interesting project because I got brought into it. Some friends of mine bought it on a 1031. And they're kind of stuck because all their equity's trapped up and all their properties that they can cross collateralize are non-existent. So they're trying to figure out how to market and sell it and or get the debt and the equity that they need to go develop it. So they brought me in as an owner to help them solve that problem. And I like it because it uses, another part of my skill set, which is creative marketing, creative strategy, but I also know how to raise capital. I also know the SEC code as it relates to Regulation D and 506C and what we need to kind of get through in order to make that happen. So it's a cool deal. Laramie's kind of a weird market. You got the college university there. There's like 40,000 people and probably like a third of those are college students. but it's an incredibly entrepreneurial little community. And so there's no product like what we're about to create, which is a for sale personal warehouse effectively. So we actually have like entrepreneurs and startups and working with the university to try to get them to acquire that space, because there's not a lot of nice property to be had if you're a business owner. So
personal warehouse that's used primarily as business premise for kind of smaller company type. Is that the use case?
yeah, they would call it flex space. So it could be warehousing, it could be an office, you could, you know, have a office slash storage facility. Think plumber, window tinter, e-commerce store, somebody who just needs extra storage. You know what I mean? Actually, one of the big companies up in Wyoming is Sierra Trading Post, big online company owned by like TJ Maxx and Marshalls and all those companies. So, you know, they're an e-commerce business, but they just need a ton of warehouse space, right? So those types of companies are up there in Wyoming. Wyoming's small though. There's like 300,000 people in the entire state. So it's tiny.
Yeah. Yeah. Have you seen any data in terms of rise of entrepreneurship in the last couple of years? I'm curious where my mind is going, right? Is obviously in COVID and people moving out of the big cities and maybe not being as trapped, quote unquote, trapped to their previous, W-2 type jobs. Has that resulted in an uptick in essentially in that potential clientele for, the asset class you're talking about?
Yeah, I think so. And I think just in general, um, I think that if you have lived through a really low income growth and wage growth in the last, call it 5, 10 years, and seen everything around you get more and more expensive, and then, COVID happens and likely had a pay cut or got let go or some combination of all of those things, you're probably thinking a little bit differently about the world and how it works. I know some people that worked remote got a pay cut and used the extra free time that they had because they didn't have to commute and they could be more efficient to day trade and made more money day trading than they did at their actual, W-2 job. So, yeah, entrepreneurship's on the rise, and gosh, no time like the present. I mean, shoot, the internet has changed the game. So if you can't find other ways to make money beyond your job, people make money selling digital art now, NFTs and crap like that. So, there's entrepreneurship is definitely on the rise. That said, whether or not people are actually entrepreneurs is a different story. Most people who start businesses are technicians. They're really good at their perspective craft. Like my dad was a contractor, unbelievable woodworker. One day just got tired of working for other people. So I was going to go start his own business. But he's too focused on the work and keeping his hands on the work, and was losing sight of selling new jobs or all the other stuff that goes into running a business. And so I think people need to take some serious inventory if they're going to decide to go be an entrepreneur.
What would one piece of advice be that you would have for, small business owners around, where to put their cash today, right? Obviously, they're worried about the stock market. Most likely we're reaching all-time highs again, right? There's trepidation that there's some correction coming, inflation is hitting, right? So, for people who may not have access to a personal warehouse deal, where would you recommend that they explore for different opportunities?
And I think the first place to really look at is just within your own business. I'm not sure the depth and the breadth of all the entrepreneurs, but finding ways to free up your time and delegate and leveraging the money that you are making to create more time freedom for yourself. There's a great book called The Self-Managing Company, written by a guy named Dan Sullivan. And that book basically talks about what's called the 4 freedoms. The first freedom is time. So you have to get freedom of time before you can get freedom of money. And then once you get freedom of money, then you can get freedom of relationship, meaning you can be picky and choosy about who you work with. And then the 4th freedom is the ultimate freedom, which is freedom of purpose, which is that that ultimate freedom where you can work on the stuff that gives you energy and keeps you excited. So I'd focus there first, because a lot of times people don't have the depth and breadth of knowledge that I have acquired through years of banging my head against the wall to play in those other worlds. But the next to me is just real estate. As a business owner, you're starting to make more income while you're starting to looking for more ways to offset your tax burden. Real estate is one of the best ways to actually do that. The challenge is you can't dabble in real estate like most people do, right? This isn't like selling Advocare or Herbalife as a side hustle. This is a real job. And that's where real estate gets a bad name, is because people jump into it thinking that they're just gonna dabble. And then those are the people that get the calls at 2 a.m. when the toilet floods because they didn't do proactive maintenance on their property. So if you want all the benefits of owning real estate, but none of the brain damage, then you probably want to look at becoming a limited passive partner in a real estate deal or two. Large commercial multifamily is one of my favorites, just because, food, water, and shelter is one of the biggest needs that we have. We need to build about 4.6 million new apartments by 2030 just to keep up with demand. We can only build about 328,000 a year, and we lose 100,000 from stock. So that means we'll have built 3 million apartments by 2030 when we need 4.6 million. The demand for affordable housing is not going anywhere. So that's why I love multifamily. And you can be a passive investor in a multifamily deal and get the same, if not better returns, get all the benefits of owning real estate and none of the brain damage, and work with people like me who literally do it as a profession, who like the brain damage. And you just get mailbox money, so that would be my top two pieces of advice for reinvesting your money.
So if the audience wants to connect back with you, Samson, obviously you've got the passive income opportunities on the big multifamily real estate, right? What's the best way for them to be able to do that?
Yeah, step one is to go over to the Growth View. That's thegrowthvue.com, where they can learn some more about what we're doing, why we're doing it, how we buy it, what flavor of real estate we tend to buy. And if they're interested in learning more, they can actually fill out a form, and they can speak with one of the members of our team on the capital development team just to see if they're a good fit for our investor group. But they can also connect with me on LinkedIn. It's a great place to just talk about, real estate, connect, even talk about commercial real estate advisory or business strategic advisory. And then if you want to see what I'm thinking about, Twitter is a great place to get at me these days, where I'm, talking a little bit more about economics and everything across the spectrum, from, Bitcoin to real estate to what's happening in the economy to what's happening with our government, which is a hot topic right now. So
what's your Twitter handle?
It's just Samson Jagoras. Pretty easy to find. Yeah, if you look Samson Jagoras, SAMSON JAGORAS, I'm on all the platforms using that name. So
very cool. Accredited investors for your fund? I'm imagining it's a 506.
Well, 506C or B, we'll do both depending on the size of the deal. It's a little bit harder on these bigger deals to just work with sophisticated investors, or at least limit yourself to sophisticated investors. But we have such a massive network now. So sometimes people are coming into the capital stack as a small tranche of equity, because we have some larger capital partners that are writing bigger checks or doing the bulk load of the capital raising for us. So
very nice. It's always nice when you can stratify, right? And
yeah,
multiple different investors along the way.
Yep.
Well, very cool. Any last words of advice or pearls of wisdom for the audience?
Well, I know that a big portion of your audience are business owners and entrepreneurs, and really like the lifeblood of the economy. And it's been a tough couple of years if you've been out there duking it out in the trenches. But I will say that you guys are what makes this country great. Keep duking it out. The world needs you. America needs you. You guys are the job creators, and you guys make up 70% of the economy. Honestly, small businesses make up 70% of the economy. So keep going, keep duking it out.
Very cool. Appreciate your time today, Samson.
Yeah,
look forward to staying in touch.
Yeah, sounds good. Thanks, Liam.